We swung below and we've now managed to bounce off our support area. We actually fell below the $20,000 area. If you look at the low that we set right here, this is 19.5, and we are now back above it, potentially looking to capture a little bit of resistance. I'm going to be talking to you about where I think this could be going, if we're going to be encountering resistance a little bit later, if that's going to mean that we set a brand new low, what happens if we drop down, and what Bitcoin can do now to put itself in a better position, because obviously you guys know the deal. We have lost a lot of progress. I'm going to put this all in perspective in just a second, but before I carry on, I also want to bring the S&P 500 to your attention. We're going to be talking about this in today's YouTube video, and the dollar, because the dollar is ripping. The S&P 500 is looking weak. It looked very weak when it closed on Friday. That was, I believe, right here. And today it's opened again on Monday, and we are recovering, with baby steps compared to what we lost. So that's not great, and that is potentially going to be having some effect on Bitcoin as well. I actually have some opinions that are a little bit more controversial in today's video, so that's what you guys are here for. You're welcome. And I'm going to be talking about that in a little bit as well. So if you're excited for all of that, smash up the likes. Make sure you are subscribed as well for this very time sensitive content. But here we go. We ended up getting that drop down below the 20k area, a little bit of a deviation. Now this was just obviously a lot of panic. This was long positions getting stopped out and so on. The market ended up managing to recover higher, and the next key level that I think this market has to break is going to be right here with this green box. And the reason I've chosen this area, which stretches between basically 20,800 and 21,100, basically just a 21k area, is that I think we've already gotten this bounce off this kind of 20k area now. There's not much trading that tends to happen between these two green boxes, and we did get one little rejection right here, but after this we started to get some really big moves coming off this price level right here. Look at this, bam, another one right here, and of course our most recent rising wedge that broke down also was born on this green box right here, so in this green box even. So to come back up here for a little bit of resistance to test the market, I think would make a lot of sense. And alongside that, there are these generic indicators. They're not generic, that was a disgusting word to use. They're absolutely beautiful. They're far from generic. This is so unique. The Ichimoku cloud, by the way, guys, I've said this before a couple times, but this indicator is like maybe 150, maybe more years old. It's a Japanese indicator. Like, this is the real deal. You don't get really cool math stuff like this often. When people are analyzing the markets on TradingView, everyone's like, when they first see me, they're like, why the fuck does he use the Ichimoku cloud? Because it's fucking cool. Like, it's really, really cool. Look at this. We've already gotten that 1 hour ejection off the Ichimoku cloud. On the 4 hour time frame, the resistance now stretches down to about 20.7, lines up with my green box very well, and this will begin offering resistance to us in about 3 days, September 2nd, something like that. So there is a little bit of time on this kind of time frame, but not if we look at momentum. If you look at the EMA ribbon right here, we've had a textbook rejection. Guys, I picked these indicators because they work. It's that simple. These are free indicators as well. I've made videos on them. Bam, type this into the YouTube search bar to learn about EMA ribbons. Type this into the YouTube search bar to learn about Ichimoku clouds. These are part of my Foresight Academy courses, which are paid. VIP members will get them for free depending on how they join, and this is your free taster if you want to type those things into the search bar. But again, look at this. We did get some nice resistance here when we established this spread. We're now doing the very same thing, but this is where this is where I'm going to start thinking that actually we need to start opening our minds up to the market moving up a little bit. And I'm going to get to there is some bearish stuff I want to talk about today as well, like dropping down to 15k, for example. I will get to that kind of stuff as well, so just bear with me. But just short term, guys, we are at the bottom of this range now. The range does perhaps technically stretch all the way down to 17.6 because that is the low that we set. But really, guys, this is the low end of the range now, and we are back in extreme fear. For example, if we look at the fear and greed index, now we are going to get this updating in the next 5 hours, and it's probably going to be a little bit higher because Bitcoin had a bounce, but we're not going to be too high. I wouldn't expect the market. I wouldn't expect the fear and greed index to read anything above 27, 28. So still fairly low. Now, unfortunately, longs are still way too high. The Binance longs are just so ridiculously high. And what happens here is, as the market drops down, you know, people who hold long positions are getting stopped out of their long positions, right? Their stop losses are being triggered, their liquidation levels are being reached, so those long positions have to close. And the only way you close a long position is by selling, right? So the idea is, if the market drops, it'll knock out the long positions, and then there's going to be, you know, a nice upside where you can build long positions again. This is just how the really complicated stuff goes in trading. You don't actually need to understand this stuff, but we do teach about it, you know, with the packages that you'll get with VIP. It is something that I talk about because it is quite important, but I can't go into it in this video. You know, but what we do have is a situation where, yeah, you know, that's what you'd expect. As the price drops lower, long positions get stopped out, and now there's more short positions. But that's not actually what's happening. You know, what's happening is that whenever the price gets pushed down and long positions are closing, other people, or maybe the same people, are just opening new long positions anyway. You know, and they're opening it because the price is lower. So this is the kind of this is where it gets funny, right? Because if the price keeps on dropping lower, it should theoretically become more attractive to go long, but up until what point? You know, when do people start panicking? That panic point might be 17.6. If we fall below 17.6, I would be very surprised if I still saw longs piling up, and the primary reason for that, guys, is we've had big drops down like this, followed by you know, quite large consolidation quite a few times, right? So to get into this range, there was a big drop down. We traded sideways, it was horrible. We kind of angled upwards, it was a really nasty trading range. We fell. We did it again, we fell. We're doing it again right now. If we were to fall again, you know, I just don't know how long that confidence can stay in the market, and I am starting to see it crack. You know, so if we do manage to swing below 17.6, I am unfortunately going to be expecting resistance. I'm not going to be expecting a deviation like this and then the market comes back up. That's not something that I would expect the market to do. Why? Simply because, you know, I think there's going to be a lot of sellers at 17.6. I think there's going to be a lot of fear. I think if the market did end up dropping down there, the dollar would probably have to start doing some crazy shit, and the S&P 500 would probably be in a really bad place if Bitcoin ended up falling down there. Because, guys, let's keep in mind now, Bitcoin isn't necessarily moving all on its own. You know, a lot of Bitcoin's price movements are going to be dependent on what happens in, you know, major indices like the S&P 500. You know, it's going to be dependent on where cash is flowing in and out of the dollar. You know, so that's why we look at the dollar index as well. You know, there's quite a few much larger aspects of the economy and money that that you kind of, in my opinion, that you have to take note of. If you don't, it's almost like you're going to a shooting range but you're blindfolded. Like, come on, you need to there's some new stuff you need to learn about, guys. Fuck me, it's this is the reality of the market. If you don't like it, it's not for you. You know, this is yeah, you got to put some effort in, guys. You know, so these are important things to be keeping in mind, and I don't know if I can see Bitcoin you know, doing that drop on its own. You know, like Bitcoin isn't actually in a particularly bad position. It's not actually, Bitcoin is not actually in a position where it's technically super weak, and so that is something which I think could you know, could prevent Bitcoin from falling before everything else. And if we do end up falling, then yeah, like I said, resistance here probably much lower. Not really something I want to talk about right now, because I just don't think we're going to get that anytime soon. Because the main thing that I think is worth bringing up to you guys right now is actually just that, you know, Bitcoin, now that it is at the bottom of this range, you know, I think bears are starting to get a little bit too cocky. I think they're starting to get a little bit excited, a little bit overexcited when the market drops down to certain levels, which, you know, you guys know me, I'm not a fan of stuff like that. You know, when people start getting too overexcited in any direction, whether it's up or down, you know, I'm gonna start asking questions. I'm gonna start you know, wondering if we're ready to reverse, because as I've been saying, you know, the fear and greed index, the long and short ratio, which you can check out on mdxalgo.com, run by one of my friends, you know, these have generally tended to be the more reliable indicators for me to be viewing right here in this market. So I'm going to keep on using them. Now, just looking at the upside real quick before I start talking about the bigger stuff, I do want to give you some real analysis on the SPX as well. I just want to extend this range out and just show you guys that if we're able to reclaim this range between, you know, at about $21,000, you know, I think that next key area is going to be about 22.6. There is 21.7, which is basically where we got rejected from just now, you know, which could be a problem for Bitcoin if we're able to get up here, you know, like, you know, potentially a little bit of a rejection here, and there has been some you know, key price action taking place at this level, but for the most part, for me, it is going to be this resistance area up here. You know, so there's quite a lot that Bitcoin has to do. I mean, the thing is yes, like, we're at the bottom of a range, so this is where you should start, you know, generally expecting bounces. Just with, you know, just with classic TA doesn't mean you have to follow it, but if that's what you are following, then you would expect, you know, a bounce off, you know, this kind of general zone. You know, that's the good news, but the bad news is, you know, then you've got to fight all the resistance to get back to the top of the range, and that's before you even break out. You know, then you need that extra oomph just to get above that resistance area, right? So you're fighting an uphill battle right now, guys, and we're fighting an uphill battle within a downtrend. So generally, these things don't work out for us, you know, and if we take a look at what's going on with the S&P 500, you know, to put all of this into a little bit more perspective. Now, I'm not actually personally too worried about this. You know, if you guys will remember back here, I was actually very vocally saying that the S&P 500 needs to pull back. I said this right at the top, guys. It was pretty damn impressive. If we actually measure this, it was an 18-19% rally to the upside. I was saying this at like 17-18% is when I was saying, you know, the S&P 500 needs to pull back. It doesn't generally rally like this too much, you know, and so the question is now, if this does end up pulling back, you know, are we going to find support? Because we do have some key levels that we could expect some support at. Let me show you those. Bam, right there, some very, very important areas of support, especially this green area right here. This is the one that I'm going to be focusing on. Let's actually throw a fib on this, because I remember seeing some interesting fib action right there. Look at this. So this green box, I didn't plan this, by the way. This is just the beauty of TA. It just went according to plan anyway. You know, we have the 618 retracement and 0.5 retracement literally on the lines of the box that I drew months ago, or a very, very long time ago. Definitely not recently. You know, so that's super, super impressive, showing us that you know, this is going to be a beautiful zone for the S&P 500 to fall down into. If we do fall down here, what does that mean for Bitcoin? I don't know. It probably means we sweep our prior low. So, you know, we're probably going to drop below 19.5, probably down to, I don't know, 18.6, something like that. It doesn't really matter, you know, because at this point, I would expect a very nice bounce for the S&P 500. And actually, that would set quite an interesting bit of price action for Bitcoin as well, because if Bitcoin is able to fall down now to, let's say like 18.6, the very bottom of this range, that is going to be a macro higher low situation if Bitcoin does then rally harder from there. So that would be probably the best sign we can get. It would be a very big move, you know. It would be a very, very big thing that would I think dominate the chart for Bitcoin a little bit, and it would paint a very, very important story if we started to get something like that. So I'm not saying we will, but it would be very nice if we did get something like that, just given that yeah, we would then be able to you know, enter quite an exciting rally. That's if you think the S&P 500 is going to hold. The bad news is we've actually had patterns like this many times before. I'm not going to talk too much about them because I'm actually making a separate video entirely on that subject alone. But the S&P 500 has formed similar kind of patterns to this. Let me just hide all of this stuff now because it's getting a bit confusing. The S&P 500 has formed kind of similar patterns to this, where it'll drop down by quite a bit. I mean, it'll enter a bear market. You know, really, I mean, this is a -24, you know, and -20 is bear market territory. You know, and then it'll get a really explosive rally, and I mean a very explosive rally, and then it'll really tank. You know, and we have seen that happen before. So it's not recent. This is decades ago that we've seen stuff like this happen. But it has happened, so you know, I'm not one to ignore facts, and that is important, because if we look at where the dollar is, you know, it is exceptionally strong. I mean, I'm quite surprised, honestly, to on this occasion. I am surprised. I mean, this is a lot of strength that the dollar is continuing to produce right here, seemingly out of nowhere. And yeah, I mean, you take a look at this range. There's nothing really stopping the dollar from getting all the way up to 120 on this level, and you can kiss Bitcoin fucking goodbye if that happens. Like, I'm really sorry, guys. I love Bitcoin to bits. I've been happily putting most of my net worth in it ever since like 2018, you know, when I became red pilled on the whole thing. So I love Bitcoin more than the average person, and more than most people in this space, but I'm still a realist, and things are going to get really, really bad for anyone really that holds any type of asset. Not just Bitcoin. We're talking watches. Those guys need to get humbled. Like, they are pissing me off. I'm glad that their market is starting to crash now. Honestly, that got annoying. And the real estate market, now this is just the last one, right? This one's only starting to topple. You know, that this is basically it. And you know, I think if the dollar were to, you know, rip like that, you know, I mean, we're talking about like puzzle pieces that could, dominoes that could kind of like set the whole chain off. I don't know, but you know, something big would probably happen. You know, we'd probably see some quite abysmal levels in the indices markets. I'm saying probably because I want to retain a little bit of, you know, journalistic professionalism, or whatever. I don't know what word I was quite going for there. But you know, really, you know, between you and I, yeah, I think it's damn near certain, you know, that the S&P 500 would hit horrible levels, you know, and that Bitcoin would probably follow, and that's where we start looking at, you know, like a $10,000-$11,000 Bitcoin, something like that. None of these things would actually be too scary overall, though, because, you know, I just want to remind you guys, while I'm really getting deep with you here, you know, the dollar also drops really hard. You know, I mean, this is not a level that I think the dollar is going to break. My God, if it did, I'd probably just retire at that point. That would be quite something. You know, but this is pretty standard. You know, I mean, the dollar has gone on rips before. You know, and it's come back down just as fast many times. You know, I mean, the dollar at the end of the day is a shit coin, you know, so it behaves like one. It just behaves very slowly, but it still behaves like a shit coin nonetheless. The trend is undeniably down, and so yeah, absolutely, I'm not worried about this stuff long term, but absolutely short term, yeah, there could be some pain right here. And this is the thing, is the dollar is clearly trying to break up into this range, and there's nothing stopping it, you know, from ripping up by quite a bit right here. So this is what I just want you guys to be paying attention to, keeping an eye on, as well as just this big range right here. You know, we've already, from the low of the dollar right here, this was June 2021, that was summer of last year, so that was when Bitcoin was actually Bitcoin was doing that like 90-day weird, like Bitcoin was on its period type thing, and then it, you know, managed to come back up, you know, so that was when that happened, you know, but it did still mark quite an important time in the market, and you can see how the dollar just completely put its middle finger up to the whole crypto, equities, everything markets, you know, just by rallying up right here. So you know, there is something going on, guys. There's you know, I don't understand why people still deny that the dollar has a really big influence on the market. I would say the biggest influence on the market. Really puzzles me. You know, you only have to look, and it becomes very obvious, because the inverse correlation is extremely obvious. But alas, here we are. That's why you guys are here. That's why I'm here. We're talking with reason on this channel. So there you go. I hope you have enjoyed this one. If you have, you know exactly what to do. Guys, check out BitGet in the description. You're gonna get $8,000 for signing up to them. This is a new exchange that I'm using. It's not new, I'm sorry, it's new to me, but these guys have been around for quite a while. They're actually really big. They're one of the bigger exchanges. So I was actually surprised that I hadn't heard of them until just beginning of this year, around about then. But these guys are good at what they're doing. They're offering a really sound product. It's great. I use Bybit. I use these guys. I'm happy with them. Check them out with the link in the description, and you will get $8,000 potentially for signing up, just in bonuses, using my link down there as well. So if you like the free cash, go ahead and check it out. And I will see you all in my next video. If you want to get inside VIP, bam, that's on screen. Like, subscribe, click the bell, and I'm out. Bye-bye.